If you started investing in artificial intelligence, if you're like a majority of people, you know it is being integrated into everything. I mean, they are replacing jobs, they are replacing people, they are replacing entire systems, entire companies that can be run essentially by artificial intelligence. And in today's video, we're going to be looking at two monster AI growth companies to buy before they join Microsoft and Apple as those $3 trillion companies. Now, when it comes to tech companies, they are doing incredibly well. And the two that we're going to be breaking down and really focusing on and looking at tonight is NVIDIA and looking at Alphabet, which we know runs Google. That is right. Alphabet is Google. Google does run pretty much everything when you talk about the largest search engine. Not only having Google as a very large search engine, YouTube is actually the second largest search engine, which is kind of crazy. And when you think about monster returns that have been returned to shareholders, thinking of NVIDIA, and that is the one we're going to be looking at first, NVIDIA is up 2,490% in the last 5 years. You are talking almost a 2,500% increase single-handedly. If you just bought NVIDIA a while ago, I mean 5 years ago, you're talking about a 2,500% increase. Now, again, that is kind of crazy, but also when you think about what this company can do, and again, that is going to be the point of this video, is looking at that. Now, looking at Alphabet, that is up 200%. We're looking at 195% again in the last 5 years, almost 200%. Now, historically, your money doubles when you're investing about every 7 years. The rule of seven really does come into play, but if you can get and literally double your money in the last 5 years, doubling it really twice over, it is kind of crazy. Now, better yet, when you look at the performance in relationship to that S&P 500, which a lot of us go ahead and invest in, that VOO, this means that they had a 90% return with the S&P 500, and again, a 200% return with Alphabet. And we know that this is only really the tip of the iceberg, because a lot of people don't understand exactly what these companies are doing, what the artificial intelligence is really going to do, and how big it can be. Now, breaking down NVIDIA, now this could be a $3 trillion company this year. That's right, guys. In 2024, we could see NVIDIA being a $3 trillion company. Right now, they're about 2.7 trillion, which means we just need a little increase, 11%, would take them to that $3 trillion valuation. Now, of course, this could happen, like I had said, this year. When you think of NVIDIA, when you think of graphics processing units or GPUs, they are the industry standard. They are really manufacturing and really building things that can manage complex data, workloads, artificial intelligence. Businesses are spending money really hand over fist when it comes to research and development. When it comes to the artificial intelligence, this is where a lot of companies are either going to be make it or break it. And when it comes to NVIDIA itself, this is one that is actually crushing it. Now, case in point with this, 5 large cloud computing companies that we have, Alphabet, Amazon, Meta, Microsoft, and Oracle, have $181 billion in capital expenditures this year. That is right, guys. You're talking almost $200 billion that is going into artificial intelligence this year. And that is according to JP Morgan Chase estimates. That implies we could see a 36 to 40% growth, or really increase to that spending growth in the next couple years, because even some of those companies are planning about a 5, 10, 15% increase when it comes to new years to really build the infrastructure for the build out of what they have in the future. Now, of course, there are very few companies, if any, that work at this level. When you think of NVIDIA, the chip maker holds 98% market share in data center GPUs. That's right, 98%. You talk about an absolute dominating monopoly when it comes to a company. And in our live stream last night, I know we had talked a little bit about, is NVIDIA really worth investing? You know, the price and earnings ratio, things of that nature. But then you add in, not only on top of 98% market share of those GPUs, but you add in up to 95% market share in AI processors, which again is kind of crazy. You're talking north of 90%, which means this company is going to have a very, very big runway for growth in the future. Now, NVIDIA is also gaining momentum in other data center hardware technologies. Its Grace Central Processing Unit CPU is ramping towards a $1 billion production line. And of course, the InfiniBand Ethernet network platform is already a multi-billion-dollar business. So when you think of computers in general, it is really the cream of the crop, or the best of the best when it comes to this company. And of course, when you start looking at their sales, they have been crushing sales, which of course, you know, anytime that they're crushing sales, anytime that they're above estimates, really makes the stock really go ahead and increase. And we know we also have that stock split that was going on, which is kind of crazy. And even when you look at some of the companies that are in comparison, some of them companies that are in the same space, they can't do it as efficiently. they cannot do it as effectively. And of course, going forward, Wall Street expects Nvidia to grow earnings per share 34% annually over the next 3 to 5 years. That makes the current valuation at 66 times the earning seem very reasonable when you put that $3 trillion valuation. And they're even estimating that Nvidia is going to be a $4 trillion company in 2026 and possibly breaching $5 trillion as a company by 2030, which again is kind of crazy. And then of course we think about Alphabet. Now Google, if you're familiar, like I said with Google, the search engines, also YouTube. I mean, there's so many things that this company is doing. And of course, supporting the channel, YouTube growth. If you like the content that I'm putting out there, please subscribe to the channel. But Alphabet currently has a market capitalization of 2.1 trillion, so not quite as high as Nvidia, but that means the share would have to increase 43% to hit that $3 trillion valuation, which they are estimated by 2025 that we are going to see that. Now, Alphabet is the largest ad tech company in the world, period, and the third largest cloud infrastructure provider in the world. So you're talking about number one when it comes to the ad tech companies, number three when it comes to the cloud infrastructure provider, which is kind of crazy. They have been growing about 20 to 25% year over year, and they're expecting that growth to stay all the way through 2020 is what they're estimating right now. Now, of course, Alphabet also added the conversational feature in Google Ads that let brand create really their own natural language, their own, and this is where it kind of has to put the brakes on a little. In thinking about this, AI powered generation and AI profit optimization tools to boost the conversion rate of people who are really keeping the advertisers. So if you're putting your ads into Google Ads, they are using AI powered technology, which of course, a majority of it is provided by Nvidia, but they are using these to really power the ads that individuals are seeing. And when it comes to marketing, it is going to boost engagement and increase user satisfaction across the platforms, which is kind of crazy. Now, also, they have brought 1.5 million developers to Google Cloud with the Gemini, a multi-module processing for language, images, video, audio, and computer code. So literally, it is going to be AI writing code pretty much across every single platform that is out there, which is kind of crazy to think. An investment bank, UBS, recently published a report about artificial intelligence with the size and seizing the investment opportunities, which AI value chain really breaks it into 3 different layers: the enabling, the intelligence, and the application. And when you start looking at companies like Nvidia, when you look at Alphabet, they're utilizing all that AI has to offer, which, like I said earlier, is going to give you a big runway. They are expecting Alphabet to grow earnings per share about 17% annually over the next 3 to 5 years, which is kind of crazy. And also, when you think of the expectations, it'll be a $4 trillion company by the end of 2025. And then, of course, by 2026, could be approaching on that $5 trillion as a company, which is kind of crazy. So then the question lies, should you invest in these companies right now? Me personally, the answer is yes. However, individually, I do not invest in the companies as much as I would like to have and really held Nvidia when it was really not quite the booming company or the 2500. But when you start thinking of some of the bigger growth ETFs that we have, and again, it is my plug for ETFs, it is the only thing that I invest in. But when you start thinking of the Vanguard technology funds, when you start thinking of the QQQM, when you start thinking of some of these ETFs are running 30, 40, even 50% very heavy tech companies. So again, when you think of Apple, when you think of Nvidia, when you think of Microsoft, when you think of Google, they are holding a lion's share of these companies themselves in these ETFs. And of course, they have a bunch of other tech companies built right in there and really baked into the ETF itself with a super low expense ratio, meaning that if you're putting money into those growth ETFs like QQQM, which I personally do hold in my portfolio, you're going to have an exposure and a lot of exposure to these companies. Then of course, with the foundational ETFs like the VOO, you're going to have a little bit more exposure to these just because of the market weighted cap that they do provide. So guys, that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.